The Corporate Transparency Act has introduced a major new reporting requirement, and if you own a business, you need to know about it. The beneficial ownership information filing is now mandatory for most companies, and failing to comply can lead to hefty fines and even criminal penalties. But if you've been following the rollout of this law, you know it's been anything but smooth. Legal challenges, court injunctions, and constant back and forth have left business owners confused about what they're actually required to do. Most recently, the second injunction was lifted on February 18th, meaning the BOI reporting requirements are back in full force. For businesses formed in 2024, the initial filing deadline is now March 21st, 2025. In this video, I'm going to break down everything that you need to know. Who has to file, what needs to be reported, what deadlines can't you afford to miss, and what happens if you don't comply. I will also clarify the recent legal chaos and where things stand today. I'm Esri Bennett, and this is Bennett CPA. The Corporate Transparency Act was enacted as part of the Anti-Money Laundering Act of 2020. As the name suggests, its purpose is to increase transparency in corporate ownership and prevent criminal organizations from using corporations and LLCs to evade the law. Although the reporting requirements were originally set to take effect on January 1st, 2024, their implementation has faced multiple legal challenges, leading to a cycle of pauses and reinstatements by the courts. In this video, we'll break down the compliance requirements of the Corporate Transparency Act and clarify the ongoing legal developments surrounding its enforcement. While I've taken great care to ensure the accuracy of this information, please note that this video does not constitute legal advice. I'm not a lawyer, and I won't be covering every detail necessary for preparing your BOI filing. I strongly encourage you to conduct your own research. For your convenience, I've included a link to the latest BOI compliance guide from FinCEN in the description below. If you own a domestic or foreign reporting company, you are required to submit your beneficial ownership information to the Financial Crimes Enforcement Network, or FinCEN. For companies created or registered before January 1st, 2024, the initial filing deadline was January 1st, 2025, and has since been pushed to March 21st. If your company was formed on or after January 1st, 2024, you must file within 90 days of its creation or registration. If your company was formed on or after January 1st, 2025, then you only have 30 days to file. Additionally, any changes to your BOI filing, such as ownership updates or change of address, must be reported within 30 days of the change. A domestic reporting company can be a corporation, limited liability company, or entity created by the filing of a document with a Secretary of State or any similar office under the law of a state or Indian tribe. A foreign reporting company is an entity registered to do business in the state or tribal jurisdiction by filing a document with a Secretary of State or similar office of the state or tribe. Certain types of reporting companies are exempt from submitting BOI reports to FinCEN. This includes securities reporting issuers, governmental authorities, banks, credit unions, depository institution holding companies, money services businesses, brokers or dealers in securities, securities exchanges or clearing agencies, entities registered under the Other Exchange Act, investment companies or advisors, venture capital fund advisors, insurance companies, state-licensed insurance providers, entities registered under the Commodity Exchange Act, accounting firms, public utilities, financial market utilities, pooled investment vehicles, tax-exempt entities such as nonprofits or charitable trusts, entities which exist to assist a tax-exempt entity, large operating companies, subsidiaries of certain exempt entities, and inactive entities. A large operating company is an entity that meets all of the following criteria. It employs more than 20 full-time employees in the United States, maintains an operating presence at a physical office within the United States, and filed a federal income tax or information return for the previous year reporting more than $5 million in gross domestic receipts or sales. An inactive entity is an entity that was established before January 1st, 2020, is not engaged in an active trade or business, is not owned by a foreign person, has not changed ownership in the past 12 months, has not sent or received more than $1,000 in the past 12 months, and does not hold any assets. A beneficial owner is any individual who, directly or indirectly, exercises substantial control over a reporting company or owns or controls at least 25% of the ownership interests of a reporting company. An individual exercises substantial control if they meet any of the following criteria. They are a senior officer of the company, such as a president, CFO, CEO, or another officer who performs vital functions to the business. They have the authority to appoint or remove certain officers or a majority of directors of the reporting company. The individual is an important decision maker. The individual has any other form of substantial control over the reporting company to account for any unique or flexible corporate structure where control might otherwise be obfuscated. An individual has an ownership interest in a reporting entity if they own or control at least 25% of all the ownership interests. This includes equity, stock, voting rights, a capital or profit interest, convertible instruments, options, or other non-binding privileges to buy or sell any equity interest, and any other instrument, contract, or other mechanism used to establish ownership. There are 5 exceptions from being considered a beneficial owner. Number 1, a minor child, although their parents' information must be reported instead. A nominee, intermediary, custodian, or agent acting on behalf of the real beneficial owner. An employee of the company whose substantial control is derived solely from their status as an employee and who is not a senior officer. Someone whose only interest in the company is through a right to inherit it in the future, or a creditor of the reporting company. Your BOI filing will include the following information, so have it prepared before filing or give it to your accountant or lawyer. The full legal name of the entity, all trade names used by the company, the complete address, the state, tribal, or foreign jurisdiction of formation, and the entity's tax identification number. For each beneficial owner, you must report their full legal name, the date of birth, the complete current address, a unique identifying number, and issuing jurisdiction of a U.S. passport, state driver's license, ID document issued by a state, local government, or tribe, or if none of the above are available, a foreign passport. The penalties for failing to comply with the Corporate Transparency Act are severe. If you think the IRS is strict, just wait until you hear what FinCEN is threatening to enforce. Anyone who willfully violates BOI reporting requirements may face civil penalties of up to $500 per day for each day the violation continues. Adjusted for inflation, this penalty currently stands at $591 per day. In addition to civil penalties, willful noncompliance can lead to criminal penalties, including up to 2 years in prison and fines of up to $10,000. These penalties apply if you willfully fail to file a BOI report, willfully submit false information, or willfully fail to correct or update previously reported information. There's been a lot of back and forth surrounding the rollout of the BOI filing system. Originally, the deadline was set for January 1st, 2025, but things quickly got complicated. On December 3rd, the U.S. District Court for the Eastern District of Texas issued a nationwide injunction suspending all reporting requirements. Then, on December 23rd, that injunction was lifted, effectively restoring the original deadline, only for it to be reinstated 3 days later on December 26th. The first injunction was lifted again on January 23rd, and the second followed on February 18th. After all this legal whiplash, the BOI reporting requirements are officially back, and they're probably here to stay. Hopefully, the confusion won't make it harder for reporting companies to stay compliant with this new law.